you can't hide from your net worth.
Your net worth will always find you.
Yes. It's watching you, hiding in the shadows. Welcome back, everyone, to the Financial Philosophers podcast. Danny, as always, it's great to see you.
You as well, Chris. Hope your day's going great.
It is. If you were here last episode, to our listeners, we talked about budgeting, and we did a little bit of a deep dive into the importance of that.
Pretty deep dive.
Yeah, and today's topic is about net worth. And I would argue that it fits nicely on the back of the episode we did on budgeting, Danny. I think they...
Absolutely.
They're both tools that you have to measure your financial situation, right? So you hear net worth thrown out there a lot. I am often surprised by how many people don't know what a net worth is. It's just commonly used all the time, but even people who have said that they understand what it is, there's still aspects about it that they perhaps don't understand or weren't even aware of, especially how profound it can be.
That's interesting because of how simple of a calculation it is, right? It's one of the most simple things you can calculate within the world of finance.
Yeah. It's literally, it's your assets, everything you own, everything that's worth some value, minus your liabilities, your debts, whatever you owe anybody, right? So it's just assets minus liabilities. That's it. But there's actually a lot to think about regarding this calculation. It is another fundamental financial truth about your situation, very similar to your budget, right? But like you said, Danny, it's simpler to calculate, but I would say arguably more profound, right, than a budget. I think
that's where I might differ. I might diverge a little bit from you. It's certainly profound to me. It's profound, but it's more of a goal measurement. Whereas to me, I think the budget is what has the true, calculatable, tangible effect on your life, right? The budget is what allows you to hit those net worth goals. Whereas to me, the net worth is a goalpost that you can move as you reach certain milestones.
I agree. I think it's obviously it could be a matter of opinion on what we think is more profound, but they are so interconnected, and we're gonna explore that today, and we'll leave it up to our listeners to decide what they think is more profound. The financial truths that you uncover from going through a budget exercise, or the financial truths that can be observed by tracking your net worth, right?
Yeah. For those of you listening, I'll go ahead and I'll create a poll on our YouTube channel if you wanna vote on that, on what is more profound in your eyes.
That could be interesting. So I think net worth is one of the most objective measurement tools we have for tracking someone's progress, right? And
for sure.
Why should we care about net worth? Why is it profound? For starters, it is your financial reality, right? It's your true north. It's your best measurement you have for whether or not you are making progress with your goals. So let's dive into this a little bit, right? So you're going to see a lot of people in your life, friends, family members, colleagues, famous people even, whoever it is. You're going to hear about how much money they make, what their income is. You may see the nice fancy cars they're purchasing, or the designer clothing, or multiple homes, or luxury items, whatever it is. They may even brag about the returns on their investments, right? None of that matters if those gains or those purchases are being offset from other habits that are detracting from the net worth, right?
Well, I mean, another side of that is those purchases, let's say fancy cars, right? Like really nice cars cost a nice chunk of money. Fancy houses. If those purchases are not made with cash, then those purchases are initially, at least, very much hurting those people's net worth because it's being financed with debt.
I would actually say no.
Really?
No. Yeah, because think of it. If you want to buy a house for $300,000 and you have $300,000 in cash, and you take that cash and you use it to buy the house as a lump sum, and the house is worth $300,000, your net worth has not changed. It has stayed exactly the same. Likewise, if you leave that cash in your bank and you take out $300,000 in debt to buy a $300,000 home, your net worth also has not changed. It's just a zero effect. Nothing has happened.
So that makes sense, and that's fair with something like a home where the assets should be relatively stable. There's some arguments as to whether or not we have a bubble or there's a crash coming, things like that. But a home, we generally assume it to maintain some form of value.
Right.
So I suppose the purchase of a vehicle then, or a fancy car, it would depend on the car, right? And whether or not it's expected to maintain its value, rather than, a mid-range car, you might lose 20-30% the moment you drive off the lot.
Right. I think a car is a good example of one of these things that seems to artificially display one's wealth, right?
Absolutely.
Because it's fancy, it could be expensive. But think about, let's see how this actually flows through to the net worth. And here's again, this is where the net worth calculation becomes super profound despite its simplicity. You buy a car. Maybe it's a luxury car, right? But we'll just take a regular car, keep it simple. Let's say, $40,000 for a vehicle, whatever vehicle it is. So you took $40,000 in cash and you bought a car in cash, in full, no debt.
Okay.
You've simply shifted $40K from cash to a $40,000 vehicle. In a very, very short period of time, there's been no change to your net worth, right? You just shifted it from one bucket of value to another bucket of value. However, as we all know, almost every vehicle bought is guaranteed to depreciate in value. So by virtue of purchasing a car, you have virtually guaranteed a constant rate and decline in your net worth.
Absolutely. Right? 2021 carpocalypse notwithstanding.
Notwithstanding, yes.
And there are some caveats here in terms of collectors' vehicles that have hit that classic age and are well maintained.
Yeah. Yes, well maintained, but even then, maintaining the vehicles costs money, right? Like every financial decision you make affects your net worth. Anytime you're spending something, that's going to affect your net worth. When you're buying a car, you may have kept your net worth the same for that short period of time, but now it's going to decrease, right? Because the car depreciates. Now, if people weren't aware of this simple truth, they may continue to think, like when they see their friends or their family or colleagues driving really nice vehicles, they're thinking, wow, they're wealthy, they're doing well for themselves. That may be, but them buying a nice car is not improving their net worth, right? That has no bearing on their wealth. In fact, it just detracts from their wealth in most cases. So
okay, that makes sense.
The point is that the net worth, when you're actually being honest and calculating it accurately, it cuts through all of those artificial aspects, all of the BS. Like you can't hide from your net worth because it's going to reflect it. Ultimately, everything will boil down to your net worth, and you won't be able to hide from it.
Your net worth will always find you.
Yes. It's watching you, hiding in the shadows.
It's like Santa Claus, but more real.
Yes. It knows if you've been good or bad with your cash, right? So you can't hide from it. So we're going to explore that a little bit more in just a few minutes, but let's go through a quick example of what a net worth statement would look like, right? Let's quickly build one, good. Right? So to any of our listeners who have not been through this before or have not thought very deeply about your net worth, just kind of go through this in your head. And if you have a piece of paper, you can jot things down. So first, start with your assets. Look at all your bank accounts, all of your cash. Write down that number. Then look at all of your investment accounts. Could be regular brokerage accounts, could be retirement accounts, 401ks with your employer, IRAs, whatever it is. Write down the values of all those. Do you own a home? Write down the value of the home. Do you own any cars? Write those down too. On the cars, that could be tricky. I've always done it just by looking at Kelley Blue Book and trying to get an estimate. Yeah. And I usually scrape.
These don't have to be accurate down to the dollar. It's a general sense of your net worth.
Yep. Beyond cars, think about your collectibles or any valuable items you might own, right? Those,
You have some, don't you?
yeah, I have some collectible vinyl records and
Nice.
some video games, things like that.
Awesome.
Um, so anything that has a cash value, anything that could reasonably be sold, whether it's liquid or illiquid, right? If it has value that you could reasonably sell it to turn to cash, write down that value. And it doesn't hurt if you want to be prudent. If you're when in doubt, err on the side of caution and maybe be conservative with your estimates just to have a more realistic picture. Once you get through all of your belongings, all of your assets, move on to liabilities. So, car loans, student loans, mortgage, credit card debts. Maybe you have a personal loan. Maybe a family member gave you a family loan, right? Anyone that you owe money to in any form, that's a liability. That's a debt. Write those down as a negative number underneath all of your assets. Simply take your assets, subtract your liabilities, and congratulations, you have your net worth. That's literally all it is.
All right,
So,
some basic subtraction, and you can know exactly where you stand in terms of your financial progress.
yep. So let's take it back to why is this important? What do you do with this information, right? So, kind of hammering down some points we were just talking about. A lot of people think that a person's job or their income or the belongings they have demonstrates their wealth, but again, that's where the misconception comes in. Your job, your income, your belongings are not your wealth. This goes back to the old saying that Danny, it's not about how much money you make; it's about how much you keep.
Yeah,
Um,
how much you keep, how much you save.
yeah,
Exactly.
I don't know if you've ever met high income earners who don't have much to their name, but I do come across them from time to time, right? These people who have high incomes, but surprisingly, if you were to look at their net worth, you're like, wow, there's actually not much savings to your names.
I don't know a lot of high income earners, but those that I do know, no, there's some in the family, and then I have a neighbor that owns his own business that brings in
Nice.
an incredible income. They all tend to live below their means.
Yeah.
So they aren't
Yeah.
showing off a lot, and a lot of that is just going to kind of building their safety net and preparing for the future.
Yeah. I think this is, there's a book and it's been a long time since I've read it. And I actually didn't even read the whole thing, but I think it's called
Scandalous.
how dare I start a book and not finish it?
The millionaire next door.
Yes, that's the
Yep.
one. That's the
Yep.
one. And I think they literally talk about that. Like, a lot of these millionaires, you wouldn't realize they were a millionaire by looking at them, right?
The majority of them, they've
Yeah.
done the financially responsible and prudent thing, and they've built up their wealth and their kind of means through a gradual increase, gradual savings, living below your means.
Right.
And one of the ways you get there for the average person is by not being flashy with it and knowing when and where you should be spending your money.
Yeah, because a lot of successful millionaires are aware of what a net worth actually is and how it truly tracks your progress. They know that if they buy a luxury vehicle, they've just bought an asset that is going to decrease their net worth year over year over year, right? So that's a good point. And as a quick side note too, just in case some of our listeners aren't aware of this, I often, when I ask people, what do they think a millionaire means? Like, how do you become a millionaire? Every once in a while, I'll get a response, something along the lines of, oh, I think that's like when you make like $1 million in income per year, right? Like
Interesting.
they're tying that word to
Yeah.
their income, right? As
They're
opposed to
basing it
their,
off of the active income. Okay.
yeah, to the income. It's not as uncommon as you would think. So I thought I'd mention that. That is not what a millionaire is. A millionaire is one whose assets minus their liabilities equals $1 million or more. That's it. For a lot of people, they eventually hit that number, usually later in life, and usually the asset that puts them over that mark, that takes up the bulk of their net worth, for a lot of American households, it's their home, their house, right? They live in it for 30 years, paying off a mortgage.
Absolutely, and I'll get into that a little later as we go through examples for sure.
Sure, yeah.
So you've discussed what it is, why it's important. What should we all do with that info now that we know what it is?
Yeah, no, good question. So when you've gone through this and you know what your net worth is, and it's either going to be a positive number, a negative number, or roughly flat, right? I think from that point, you are able to see where you currently stand, right? And for a lot of people, it may be negative, especially people who have been, going to college, getting their degree, maybe even going to graduate school, especially doctors, people in the medical field. As soon as they graduate,
absolutely, it is
negative net worth.
Mega negative. It is not uncommon for them to graduate with a net worth of negative $300,000 to $400,000.
Yeah,
but
absolutely.
But that is one of the few professions where getting that degree is worth it long term with your expected earnings. As long as you live below your means and you pay that off aggressively, you'll be just fine.
Yes, and that's a good point. I want to actually, based on what you just said, I want to tie last week's episode on budgeting to this.
Okay, sure.
When I look at my net worth, I like to take my free cash flow per year and just plop it on there as a number so I could see it next to my net worth. And you get to that number by going through that budget exercise. When you know all of your expenses, your dollars in, dollars out, how much money do you have every month in free cash flow to deploy towards debt, paying off debts, or saving or investing. That free cash flow is the driver that's going to accelerate your net worth growth, right?
And that's the first tier, like base level driver. You can look at your free cash flow from the budget, and you can look at your current net worth and know at the end of the year it should be that much higher. And that's excluding anything like interest, dividends, capital appreciation, home appreciation, etc.
Exactly. Yeah. Okay. So now you know where you are. You know what your free cash flow per year is. You can, like you said, you can get a rough idea right off the bat. Oh, in about a year, my net worth should increase by X amount of dollars. And then if you're, being diligent with how you deploy that free cash flow, saving it in high yield savings, paying off debts, and saving on that interest rate or whatever expected investment returns you're hoping to get, that's only going to compound that acceleration towards growing your net worth. Yes. Another thing I like to throw on there, this is a callback to episode number 1 about our earnings potential being one of our greatest assets.
Absolutely.
It's not technically part of your net worth, so I wouldn't plop it in there as an asset.
Is that that's because it's not guaranteed, right? Because you never know what's going to happen?
Because technically, if you were forced to liquidate all of your belongings, you wouldn't be able to just say, "Well, I'm just gonna liquidate, $2 million out of thin air," because it's my future earnings in present value. It doesn't actually technically fit on the definition of a net worth statement.
Yep.
Even though the present value of all future earnings is very much reflected in, for example, the price of stocks, right? The price of companies, right? But we are not publicly traded companies, so it does not get reflected on net worth.
We can't take advantage of all those deductions and tax loopholes.
Right. So, but I do like to plop it on there, like right next to my free cash flow. If you listen to episode 1,
it's just a little separate so that you can see, okay, this is not guaranteed, but here's what it might mean in the future.
Right. It's just an idea of like, this is roughly speaking, based off of my assumptions, how much I'm expecting to earn over my lifetime. It's the present value of all of my expected future earnings. And when you throw that on there, it just gives you another number to play with in your head. Like, wow, if I'm going to make this much money over my lifetime, and this is the present value of my future earnings, it may give you some ballpark goals of where your net worth might ultimately land or where you might want to shoot for over time, right? It's just kind of another piece of information that's kind of fun to put on there. So what do you do with this, right? So based on the information you're looking at, whatever your net worth is, you're going to get a sense of how many years it will take you to get to whatever goal you set for yourself. For example,
Yep.
if you have a negative net worth, look at it and ask yourself, based on this information, based on my current net worth, what I know my free cash flow is, what I reasonably can expect to compound my free cash flow growth at, whatever I save in or invest in or pay off debts, how long will it take me to get to a $0 net worth? How about a
Okay.
$100,000 net worth? Right, and you can go up on the line, 500,000, 1 million.
Do
And
we want to be totally transparent and talk about where we are, our current goals, and what we expect? Because I have those lined up if you want.
if you want to jump into an example, feel free.
Okay. So when my wife and I got married, it was right after graduating, and we absolutely had a negative net worth. Very little in savings, a bunch of student loan debt. I think she had something like 20K in student loans, and I had 40,000 in student loans, which I know for the average person nowadays doesn't seem like a ton, but it was a lot for us at that point. And most of our time was spent aggressively paying that down once we found jobs that allowed us to have some free cash flow. We are currently sitting right around that 500K mark for net worth.
Wow, that's amazing.
However, I will say, admittedly, the majority of that is our home. We bought in at a decent time. We've paid off 50,000 of the principal, and our home has doubled in value since we bought it. So it does look really nice on paper. It's a nice milestone to hit, and I realize it is a lot of money, and it will seem like a lot for a lot of people. But something to keep in mind: your primary residence makes your net worth look nice. But if we were to sell it now, we would actually be in a worse place because we would have to move into a new home at a higher interest rate. So yeah, we are sitting at the 500K. But my goal is to reach 1 million. My current goal, in terms of total net worth, is to reach 1 million. And by all calculations, if nothing changes, I hope we break that mark around age 44, 45. So about 10 years from now.
That's amazing, man. Congrats, by the way. That's super cool. And this is I love that you share this example, because in a previous episode when we were talking about paying off debts, you were open about how you delayed investing to rapidly pay off those student loans that you just mentioned, that where it had you in a negative net worth, right? And you bought your house and you lived in it. Like you stayed there. That house had time to appreciate in value. And that's amazing. I think that's such a cool story. Yeah, and now you have a goal that you can set for yourself, and you've probably already done that, as you just explained. Your target goal is by the time you hit age 44 or 45, you're hoping to cross that $1 million threshold.
And I just want to call out, that's not my only goal in life. That is purely my financial goal. I have many other goals that are not related to money. And speaking of these goals, that $1 million mark is just a number. Money as a thing, we talk about it all the time. This is a financial podcast, right?
Right.
Money is not a real item, right? It's an idea, it's a concept. The type of money that we use changes. Throughout history, it has changed. It has meant different things for different societies and peoples. Money represents kind of economic output and energy. Simply stacking money because you want to be rich is not going to help you be happy. You should view money as a tool to put to work, to live a better life, and to help those around you, help your family, friends, strangers. Getting to a place of financial freedom not only does it kind of give you safety, but it also allows you, as some people put forth, to be radically generous, right? And helping others is one of the most amazing ways to, in a selfish way, increase your own happiness.
Yeah. First of all, I can't even follow up on that. That was an amazing insight and clarification you just gave. And I think we need to talk more about that sometimes on
Sure.
the episodes, because we
Absolutely.
do focus on the nerdy financial part, but like
Yeah,
what
let's say
you
it
just
again. Money is just a tool.
yeah, I mean, you and I talk about this off mic all the time, Danny. It's literally the motivating factor that drew us to want to do the podcast, like to our listeners, right? Like we consider this a journey, and that ultimately we want to give people the tools to improve their financial literacy and their self-awareness and achieve financial freedom so you can live an examined life, a fulfilling life, right? Like whatever that means to you. It's not about the money. It's about, achieving that life you want to live, and pursuing those deeply held endeavors that are important to you. So, wow, thank you so much for
No problem. Yeah, kind of
laying down the heavy stuff. Yeah, it's good though. It's really good stuff. So let me see if I can even attempt to piggyback off of that, bring it back to what do we do with this information, right? So to our listeners, take to heart what Danny just said and think about your life and where you want to go. Think about your future self. You now have your net worth in front of you. You have information. You are now confronting your financial truth. You can't avoid it. Are you where you want to be? If you are not, you now have information to be able to take steps in the right direction, right? At the end of the day, the net worth is a tool to measure your progress. It's for tracking your progress. Helps you see past the illusions out there so you don't fool yourself into thinking you're getting ahead financially when in reality you may not be. Having this tool is knowledge. It's power, and it's a power many people fail to realize, even high income earners. So I would say to our listeners, embrace it. Embrace your net worth. To throw back to last week on the budgeting episode, KYS. Know yourself.
Know your
know your
stuff,
situation.
Know
know
your
your stuff.
situation.
Yeah. You now know where you are, and you have an idea of how long it will take to get to where you want to go, and you now know what you need to do to be able to fix that situation and take
Absolutely.
the right steps in the right direction. So,
and speaking of tools, so net worth is a tool to measure your progress. If any of you find this daunting, there are plenty of pre-existing tools on the internet that will help you to quickly and easily calculate your net worth so that you can track it over time and you don't have to do all of this manually. So if you find it daunting, you can look for one of those. I think if we find any we like, we'll probably link them below the podcast and the YouTube video when this is all complete, if you want to take a look at those. If we find them, no promises, but if we find some that we like, we'll link them.
Cool. Wow. Thanks again, everybody, for joining us, and I hope you found this to be useful as just another tool to put in your belt on this financial journey. And Danny, thanks again for your insights, as always. Really great to talk with you, and to our listeners. We'll see you next time.
Awesome. Thanks so much for talking through this with me, Chris. And as always, everyone have a great week.